Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. We're in the midst of another wild move today, so two for two on this shortened trading week, right? Massive move higher yesterday, and now massive move lower to erase all of yesterday's move. Some really incredible action. Just the speed and the magnitude of these moves is so much greater than what we've seen over the last couple of years. So just got to embrace the volatility while it's here. And speaking of volatility, we have what should be a pretty volatile event coming up in the energy market, right? So the OPEC meeting is December 6th, which is Thursday, uh, aka our next trading session because the markets, the NYSE and the Nasdaq will be closed tomorrow. So today is really like the last chance to get involved before that OPEC meeting on Thursday. So what I wanted to do in this video is just kind of set expectations, option-wise, maybe a little bit fundamentally wise as well, as we head into this pretty big trading event this week. So I've done a video recently talking about oil, and really just I mean words probably don't really describe this move as well as the chart does. I mean, just in a huge move in terms of commodity type swings, right? I mean, basically 25. USO doesn't line up perfectly with WTI, but basically 75. This translates to like $75 a barrel, and basically the low is more or less $50 a barrel. So really like a significant move lower going into this event. And as you can see, we've had a bounce the last 2 days. So what happened was going into this weekend, this G20, apparently Russia and Saudi Arabia, so Putin and Mohammed bin Salman agreed to a production cut, and that has helped out. I mean, yesterday's kind of risk-on rally helped out as well, and it was oversold, right? So there's a supposedly positive momentum for a production cut with like the key members, but it's not set in stone, and the magnitude of the cut hasn't really been established. So it leads to kind of a weird scenario where um, expectations are a little bit higher, right? I mean, the performance has been atrocious, and really just aggressive selling, liquidating, whatever you want to call it, right? But now the expectations are a little bit higher because of the outcome of the G20, the meeting, between Russia and Saudi Arabia. So now people are actually expecting a cut, and the magnitude of the cut, or maybe if no cut materializes, could really lead to outsized reaction. And I mean, just in terms of what's priced in, I'll tell you right now, and I'll go through the rest. Is a little under 70 cents, so about say about 65 cents is what the USO is looking at for the remainder of this week. So at where it's at, that's a little bit about, you may say about 5 to 6%, right? And that's not huge, but I think that there's maybe a bigger chance that we see a substantial move lower if no production agreement is put in place, or if it's less than what traders want. Because what I've been reading is that there's a pretty significant trapdoor underneath the 50 level in WTI, which is kind of lines up with the 1060 area in USO, and that could lead to another 10% move down into the mid to low 40s. So 46 has been thrown around as a big area on WTI. So underneath 1060, you could see like another 10% move down, possibly. So that's why it's big, right? And I feel that the risk reward is maybe more skewed to the downside, especially after like the positive move the last 2 days. So about 65 cents though is what the USO straddle is for this week. XLE, obviously, the most broad-based energy ETF. So this has, I mean, it is more skewed to a few bigger names, but it has oilfield service names, E&P names, mega cap names. You can see though it's kind of chopping around in like this area from earlier in the year, but you know, overall in the context of things, you know, kind of off its low from last year, obviously way off its high from earlier this year. So it's kind of in like a choppy congestion area. Uh, Not really like a great setup one way or the other. I mean, it's expected to be a decent sized mover. So right now the XLE straddle is looking at about a little under $2. So about $1.95 is what you're looking at for the remainder of this week. So that's about a 3% move. Basically, that's Thursday and Friday, right? So because the markets are closed tomorrow, you basically have 2 days. So about $1.95 for the next two sessions is what the XLE is priced in. Just I've been noticing some put protection or put buying going on in some of the XLE, also some of like the EMP names, which XOP is a little bit more focused on the EMP names, so the exploration production names. And this one too, obviously hanging out down around it's like February, March congestion area. This one has a little bit cleaner setup though, because if it loses 32 support, and there's a really obvious open area down to the 29, right? 29 area. So basically this is going to be a little bit more sensitive to the price of oil, just because of the EMP names, which are more sensitive to the price of oil. So for the XOP, what you're looking at is about $1.70. That's the price to move there. So you can see that XLE was pricing in about 3%. The XOP is pricing in closer to 5%. So you can see that this is expected to be more volatile. And that's just because it's more sensitive to the actual price of crude. So we have had some crazy. So if you go back, 2017 wasn't a massive event, but if you go back a little bit further, XOP, which I'm going to do right now, you can see that we have had some pretty big moves. So this was like the last significant. This was the last significant OPEC meeting, and that was when they had a substantial cut in production, which really like boosted the energy names and oil. So that top to bottom was about $3. So heading into this week, XOP at $1.70 straddle. It's not huge in the context of what we've seen in the past on some of these more significant OPEC meetings. So again, I feel like maybe even though some of these names have been beaten up, had a lot of selling over the last month and a half. It could still be more risk to the downside, just because people now are expecting a deal after this weekend, and if one doesn't materialize, or if it's not as much as people want to see, I mean, you could see like another washout move, especially with the market still acting a little bit weaker overall. So energy, I feel like it's quiet for long periods, and then it goes wild for really great stretches of trading. Names that typically just don't move end up moving a ton. So that's why like the last month and into this OPEC, it's worth watching energy, because these are names that maybe not get as many eyeballs, but when you have these stocks that tend to not move, you can get oftentimes some better priced options, because you don't have all of the retail interest in these. So as opposed to like the FANG names, which every single trader focuses on, if you're getting wild moves and names, like say like the EOGs or the APCs, Apache oils, like names that don't tend to move as much, then the options may not be bid up to the same degree. So there can provide a lot of potential, especially when they could be volatile, right? So as always, love to hear from you. Questions, comments, reach out. Thanks for all of you guys that stopped in at last night's coaching session. Always love the time we can spend together talking shop, talking options. Hope you guys have a great night, and I'll talk to you tomorrow.